Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Rikesh Thapa. He's the Chief Technology Officer over at Blockparty, and I've been looking forward to this segment all week because we're going to take a deep dive into blockchain and what is cryptocurrency. We have a lot of blockchain fans in the Trade Talks audience, but a lot of people out there, like me, who still don't understand some of these basic concepts. So Rikesh, thanks for walking us through all this fantastic content. What is blockchain? Explain that to us.
Yeah, no, for sure. Thank you for having me. Blockchain, fundamentally is a database, right? So any transactions or any data that you pass between a system, machine to machine or people to people, whether it's financial, whether it's, ticketing information, airline information, any packets of information, that can be logged into the blockchain like a database. And the real difference is it's an immutable series of logs that is set in a distributed system. So it's secure, it's safe, and no one can tamper with it. That's the main selling point.
So what are the benefits of blockchain outside of the safety part?
Right. So, think about this, right? You have, right now, the majority of information is stored in centralized repositories. So, maybe Oracle is storing information just in one database in one server location, or it's in a few server locations, but in the end, one main operation or organization controls a set of user data, which is very important, right? But blockchain allows us to kind of separate that out, give it ownership to many different systems, allow, communication between different systems, and allow the data to grow and scale without really having the organization incur crazy costs, without having, obviously the safety, without having security impeded. It's almost impossible to hack because unless you have 51% ownership of the whole system, you can't tamper the data. You can't have people, break the encryption and come in and steal the information, which has been an ongoing issue in every industry today.
There's a whole industry around it, cybersecurity, right?
Right,
You built an entire subsector of the technology space. So let's talk about some use cases for blockchain technology. I've heard of it, the exchanges use it, healthcare uses it, clearly technology sector uses it. But for a consumer, let's say ticketing, for example,
right.
Why does blockchain make the process better for something as basic as buying concert tickets?
Right, so going off of the use case of ticketing, right now, there are just a few companies who own all the tickets. Right, that's a major issue initially, and all these tickets, there's no transparency around why tickets are priced a certain way, who owns the ticket, how tickets are transferred, and why is it that all these tickets? I went to the FIFA World Cup for some business meetings and also to watch the games. To buy tickets, why do I have to go on StubHub or Viagogo and pay $2,500 for a ticket that's normally $700. See, there's such opaqueness in industry right now when there shouldn't be opaqueness. It should all be transparent and the user should know what's going on. Now, blockchain is public information, right? It's encrypted, but me as a ticket owner, I can look through my transaction hash in the blockchain and I can see, hey, this ticket was priced at this point and I know who's owned it and I know that that's a valid ticket that's authentic because there's only one place where the information, the true value of the information is stored, right? And moving beyond that, that's ticketing, but even payments, right? We work closely with a company called MetalPay, and basically they allow peer-to-peer payments, micropayments, kind of like Venmo. But blockchain is important in this particular space because the number, recently I've been making a lot of payments for my company and all that kind of stuff, and the number of chargebacks that happen in concerts or events or anywhere really, the number of times you don't know that the person you're dealing with has money to pay for the services
right.
that you're giving them, that is, PayPal has this system where they say, yeah, we guarantee your money back if you don't receive your service. But then PayPal has to catch the losses and somehow figure out where this person is that gave this bad info or this bad good, right? So with the blockchain, there's a trustless system since it's all public knowledge again. So it's a trustless system that means that I know that you have the money to give me, and I don't have to worry about whether you do. I don't have to check it. I just know that you have it, and the goods aren't transferred to me until it's verified.
So we know just about every sector could find a use for blockchain technology, but it often gets associated with Bitcoin, right? And this is my big question. What's the difference between Bitcoin? What does it mean relative to cryptocurrency and blockchain?
Right, so Bitcoin is a use case of blockchain, right? So one aspect of blockchain is its use in the financial sector, use in finances, like just currency as a whole, right? And Bitcoin is a form of currency that people are using because there are all these benefits associated with using Bitcoin, like being able to transfer large sums of money anywhere in the world, or even small sums, it doesn't really matter, without really having to worry about this, centralized trading desk or centralized, bank saying, yes, you can transfer money, or no, you can't transfer money. It's my money, so I should be able to do what I want with it.
So it takes out the broker, the middle person,
exactly.
in other words, right?
It truly gives regular users ownership of their money. There's no way that someone else can come along and say, hey, this isn't your money, I should take it. And there's no question about it. You own it, and that's it.
So cryptocurrency is the umbrella. Bitcoin is a form of cryptocurrency, just like Ethereum and Ripple and all these other ones.
Exactly.
Right.
Exactly.
So IBM is a stock, and it falls under the stock umbrella. So that's kind of how that works. So why are cryptocurrencies so volatile, particularly relative to stocks?
Right. So cryptocurrency, I mean, it's early days, right? How old? Maybe 10 years the tech's been around and being built, and it's become sort of mainstream in the past year or two, ever since the price rose dramatically. It's just no one knows the price points yet. It's a new industry, it's a new form of tech, it's a new form of commodity almost, and no one knows how to value it. Even the use cases have not been fully developed yet. I mean, the only way people will know what price anything should be is if they're using it in the real world. And right now, there's an issue with cryptocurrency or blockchain or any of that tech is it's still got to bridge that gap between, like a financial instrument or speculative instrument and into the hands of users where they're using it just to buy it, like the Starbucks.
I think people seem to forget that the more mature markets like equities, bonds, foreign currency, they've been in existence for years. They have matured and evolved, and you can't just get something that's been trading for 10 years and automatically apply it to those more mature institutional systems. So my next question to you is, what's cryptocurrency mining? It's like, so when a stock comes out, you're offering so many shares. Is that what mining could be compared to?
Somewhat. So basically, the concept of crypto is that there is no single owner. It's distributed, right? So people realize, when they build, it's not all crypto has a mining component to it. And there are different aspects to making a store of value, which is Bitcoin, a viable store of value, right? So one aspect is scarcity. One aspect is, to allow scarcity to happen, you need to make it hard for the good to be produced. And therefore, it was called mining. The really calling it mining doesn't really matter.
That's why people get so confused, because think of Bitcoin. Coin to me sounds physical. Then you hear mining, it sounds physical, and all this happens in an invisible process, which I think is fascinating in the same token.
Exactly.
Token, okay, that was really cheesy, but part of the pun.
Right. Yeah. So, I mean, fundamentally, what mining is there's just a lot. I mean, you can opt into it. Anyone can opt into it as long as you have the GPU or the Bitcoin mining rigs, and basically you're contributing your machine to verify transactions, and that's it. You're just saying you're offering up your machine and allowing it to say that your payment to me is valuable and it's a authorized payment, and therefore I approve it in the community, and then it's logged into the blockchain. So basically, mining and there's all these other stuff, solving cryptographic problems to allow blocks to be completed and Bitcoin to be released into the wild. And in the that makes it a little more complicated. There's like
for the next segment, we'll have to dive into that.
Yeah.
All right. So to wrap up here, what's it going to take to get blockchain technology and cryptocurrencies in particular to make that mainstream?
Right. So, I mean, that's one of the biggest things that I'm trying to deal with right now in the crypto community, which is the only way we're going to get more people involved in crypto is if we have more use cases out there, and also educating and making sure people understand that, cryptocurrency blockchain is not that complicated. Blockchain is just a database that works in the back end for most companies, it should be working in the back end for most companies, and people shouldn't really deal with or worry about like the details of how exactly the database works, right? Because you don't worry about SQL or NoSQL. These have been existing in applications forever, and no one's ever really batted an eye about it. Just developers have. But you don't care about your AWS servers or any of
No
that,
clue what
right?
you're talking about, so yeah.
Yeah, so all that tech stuff, just leave it to the tech people. All you have to understand is, you can use your crypto to buy tickets. You can use your crypto to buy airline tickets. You can use your crypto, Bitcoin, whatever, to buy your drink at Starbucks. And the key here is that you own the money, you own the currency. There's no centralized, there's no centralized authority, managing what you're doing. You have total control of it. And basically pushing crypto to the next frontier and you just have to make sure everyone understands that there are real use cases for it. That's what, for example, Blockparty, my company, is doing, and Metal, which is, and I keep talking about Metal, but basically they're also doing it, allowing peer-to-peer payments using crypto, and just giving people a taste of it without forcing it down their throats.
If you need something like a Starbucks to come out and say, we accept crypto for payment now.
Exactly.
That would really be a huge catalyst to get this mainstream. All right, well, we'll have to have you back when these things start to happen. Thank you so much for spending time with us today.
Yeah,
and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.